Hello and welcome to this carrier update. I'm here with the one and only Zach Strickland, and of course, we're brought to you by PowerFleet. So, Zach, what do you have for us?
So we've got our tender rejection index trending down. We've got our regression line here. We took a little bit of a quick acceleration downward here over the weekend. We thought we were kind of leveling out for a minute, but it is continuing downward. 20.5%, still extremely tight freight market, however. So let's look at the demand side indicators real quick. OTVI.USA, this is our tender volume. So roughly 20.5 or 1/5 of this blue block here is being rejected. But you can see there's a big drop in the tender rejection index, not a big drop in the demand side stuff. Roughly 2% down on the total tenders that are coming through the system versus the 6 or 7% percentage point drop, I should say, on the tender rejection rate. So demand pressure still extremely strong on the market right now, Anthony.
So, Zach, can you dive into a little bit of that? Because we're seeing tender rejections ease a bit. I mean, still very much tight, well over or just over 20%, but we're seeing demand not waver at all. We're still seeing it's essentially flat. It almost looks like a zero line here on this regression model. So can you dive into what's going on here as we're seeing more and more, I guess, accepted lows, but not much decline in volumes at all?
Yeah, so I think the natural idea here is that, and we've talked about it, rate increases are obviously having an impact here. As more contracts come up to the level of the market, it's going to come closer in line. So carriers are going to reject less freight because they're not going to miss out on as much of that revenue. And again, we had a really depressed freight economy in 2019. We saw rate retraction during this period. So a lot of those contracts negotiated on an annual basis. They've been getting just pushed higher and higher. We've got mini bids now being more of a factor, et cetera. So rates are coming up, but that's not the only thing that's contributing here. If we go to our next chart, which is going to show our outbound tender volume index divided into essentially, well, it's got 4 lines, but it's really 2 halves here. You can see the trend here, the divergence of short haul freight. Loads that are moving less than 250 miles away from their origin, roughly 10% higher since the first part of March. Long haul freight or tweener freight, anything over 450 miles in length, retracting at about 10%. So short haul freight tends to be easier for carriers to accept, and it doesn't remove capacity from the market itself. So we've got our short haul and local tender volume index up here in the yellow and purple, and we've got our long haul and tweener haul down here in blue and green.
So, Zach, we're talking about some of the seasonality trends here. So what do we expect to see when we're looking at this time of the year, usually going into retail holiday season, with some of these lengths of haul?
Yeah, so typically what we see is, this kind of occurs around the peaks in the summer and then around the winter. So in Christmas, the holiday periods, we see a lot of short haul freight. In the intermediary points where you're not seeing as much retail spending, when a lot of these businesses are not necessarily, they're trying to push their freight into these consumer heavy markets. Long haul freight, a lot of that maritime freight that we were talking about earlier, typically dominates, the period around August, September, October, and then it turns into short haul again coming forward. But let's look at an example of this in the Atlanta market. Atlanta, Georgia here. So this is one that's it's been one of the tightest markets in the United States. We talked about the Southeast. This is Atlanta's same chart for Atlanta, but very different story. This purple line up here, tweener freight, spiking right around here in the end of June. And the thing that you're going to have to know to make this make sense, and again, you got the long haul freight too, spiking here at the end of June. Rejection rates hit 31%, the highest it's ever been in Atlanta around this period of time. However, over the last few weeks, we've seen rejection rates really decline, and you see this orange line right here.
Yeah.
That's our short haul freight really becoming more of a factor in this market. It's helping to ease capacity conditions in Atlanta. Now let's look at Ontario real quick, and that's going to paint a little bit different picture. So Ontario, the green line here, short haul freight, 56% up since the 1st of March. Long haul freight, 19% down. And if we look at our very last chart real fast, which is going to be our tender rejection rates for these 2 markets, you can see very different interactions. 17.8% tender rejection or outbound rejection rate in Ontario versus 21 in Atlanta. Getting a little bit easier in both markets to handle, but they both had a very different diverging trend with their long and short haul freight.
Excellent stuff, Zach. I love these original breakdowns. We're